Domino's out with mixed results in its latest quarter. The pizza chain beating earnings estimates, yet revenue came in short of estimates. Shares are rising this morning. Here with the latest on what execs had to say on the quarter, we've got Yahoo Finance's Brooke DiPalma. Brooke, so what they have to say?
Well, first of all, the call started at 8:30. Typically, the call starts at 10:30, so it was an early start to our Monday morning here at Yahoo Finance. But really, CEO Russell Weiner focusing in on more rewards for customers, more innovation, leading to more sales in carryout and delivery, and of course, that partnership with Uber Eats was a pretty big topic of discussion there. Diving in further to the takeaways, the company relaunching their rewards app this fall. They said that will actually bring in a big influx of new customers there who can redeem points at various levels. Right now, that lowest range is 60 points. They also emphasize that knowing that a carry-out customer's tickets typically trends lower, they'll have a lower hurdle to get points. And they're saying that this new reward system will indeed drive profitability, tech and product innovation, and ongoing emphasis for Domino's. They recently introduced, of course, that pinpoint delivery, allowing you to get pizza whenever you want. They also are introducing pepperoni stuffed cheesy bread, which they hope drives sales as well. And of course, that major partnership with Uber Eats, a big topic on the call this morning. We now know that that 12-month partnership exclusively with Uber Eats is set to launch in 4 pilot markets, and it's expected to reach markets across the country by the end of 2023. On the call, CEO Russell Weiner gave us some insight on how and why the company decided to launch with Uber Eats. Take a listen.
By participating in the aggregator marketplace, we'll drive net incremental orders over the long term by tapping into a new group of consumers. In addition, our contractual agreement has secured the protections that we require to maintain control over our customer data and assess the incrementality of the platform. Now, most importantly, orders placed through the Uber Eats platform will be delivered by Domino's delivery experts.
Domino's said that they currently don't have the staffing in order to meet this incremental volume that they're expecting from this partnership. They also emphasize that who exactly is that audience? Well, given that Uber Eats is a higher end marketplace, they do expect a higher income audience from there. And as far as where exactly customers can look for value, they said still on their Domino's website and on the app is where they're going to sharing the most value, bang for your buck on the app. So continue to look there despite this partnership.
Okay, so all about the Uber Eats partnership, the demand that they're seeing. Let's talk about margins and inflation.
Right.
Their input costs. What's happening there?
Yeah, well, certainly food continues to be a major cost for the company. And of course, flour, cheese, things that we've seen trend higher over the past year continue to weigh. And because of ultimately those higher prices, we did see a weigh on demand this quarter. They did miss on revenue. But ultimately, across the U.S. system this quarter, we saw menu price increases of 3.9%. Once again, that weighing on customer demand. They said that they do expect average pricing to be similar this upcoming third quarter. They do expect it to moderate, though, in the fourth quarter, normalize a bit there to 2%. But now the company expects ultimately to see more deflation as far as food costs in this upcoming later on this year in their food basket. They expect that in turn to provide a boost to franchisees. CFO Sandeep Reddy shared more on the call. Take a listen here.
If the current level of food basket deflation that happened in Q2 continues, it's mostly driven by cheese, by the way, we should continue to see material upside on the food basket as we go through the balance of the year. This makes a huge difference to profitability of our franchisees, and I think that helps repair some of the pressure that they took last year in their profitability.
Now, many analysts are really focusing here on these cost improvement that are set to happen later on this year. In addition to that, they're really hoping that these top line drivers, this Uber Eats profitability, this ongoing innovation really will ultimately lead to growth for the company. And of course, Domino's, a pizza delivery company or a tech company, they're really honing in on getting more customers through their door.
And paying less for cheese,
exactly.
Ideally, I guess, as he was just saying. High cheese costs. Thanks so much, Brooke. Appreciate it. Our Brooke DiPalma.